The scene is almost surreal. Hundreds of the world's largest ships lie motionless in the Gulf of Oman. Massive steel islands, laden with oil, laden with gas, laden with goods, anchored in a vast, silent congregation, waiting for a passage that may not come. This is the immediate result of the closure of the Strait of Hormuz, a narrow, 33-kilometer-wide artery for the global energy economy. Every day it funneled 20% of the world's oil to market. Closure is no longer hypothetical, it is reality. The crisis did not emerge from a vacuum. It follows joint U.S.-Israeli strikes on Iran on February 28, 2026. Those strikes killed Supreme Leader Ali Khamenei. Iran's Revolutionary Guard Corps imposed a near-total blockade on Western-affiliated shipping. A geopolitical earthquake rippled through markets and main streets. Before, transit was a fluid dance. Now, it has stopped. The world holds its breath as a choke point closes in an Iran-US war shadow. The numbers tell a stark story of paralysis. Before the conflict, over 100 ships crossed daily. Now that number has plummeted. Since the blockade, just 21 tankers managed to pass, a catastrophic drop of roughly 70%. Flow has been choked to a trickle, a vital artery clamped shut. The world feels the circulatory collapse. This data is a real-time measure of crisis. Over 150 ships wait outside the strait. Supertankers among them, other cargo vessels too, a veritable ghost fleet. Crews in limbo, cargo stranded. Inside, more than 130 container ships are trapped. On March 7th, only one commercial vessel crossed, and no oil tankers. The blockade is effective and risk perceptions are soaring. Not a slowdown, but a stoppage, an economy caught on the anchor. The strait is not hermetically sealed. Iran enforces a selective blockade, not a total closure. Western ships blocked, Iranian and tolerated movements allowed. Closed to Western shipping and allies. Partially open to Iran's exports. Some non-aligned or friendly nations pass. Euronews calls it selective denial of transit. Less binary, more a web of permissions and prohibitions. Between March 1st and 15th, 89 ships crossed. 16 were oil tankers. Iran exported over 16 million barrels. China remains the key buyer. As of March 12th, 21 confirmed attacks on merchant ships. Drones, missiles, and fast attack craft raise the hazard. Message sent: transit without permission is unacceptably risky. Allowing some traffic divides the international response. It complicates any swift, overwhelming military answer. Enemies punished, friends rewarded, markets influenced. Reopening is not simple. It's navigating a new danger. Passage is now a privilege granted by Tehran. The most visible consequence: oil prices surged. Brent blasted past $100 on March 8th, peaking at $126 per barrel. Faster, more severe than recent conflicts. Markets priced the loss of 20% of supply. Largest disruption since the 1970s energy crisis. Shockwaves threaten growth worldwide. The Dallas Fed Q2 global growth down 2.9 points. If prolonged, oil at 132, Q4 growth minus 1.3. A parallel crisis, maritime insurance. War risk premiums jump from 0.125 to 0.5% or more. For a VLCC, that's hundreds of thousands per transit. For many, passage becomes uneconomic. 90% of global tonnage relies on P&I clubs and reinsurers. Some reinsurers won't cover the Gulf at any price. Even willing ships can't sail without cover. The strait is shut by economics as much as by patrols. Commerce paused by risk and cost. The world is scrambling for alternatives. Saudi Arabia leans on its east-west line to Yanbu. The UAE diverts via Fujairah. Critical assets but finite capacity. They cannot replace 20 million barrels per day. Drone strikes hit Omani bypass hubs, Duk Utter, Salalah, and Sohar. The threat extends beyond the Narrows, complicating workarounds. Most ships face drastic rerouting, around Africa instead of Suez to Hormuz. Thousands of miles, weeks added. Fuel, crew, and charter costs surge. Longer voyages reduce available capacity. Imperfect patches on a gaping wound. Pipelines and damaged ports offer partial relief at best. Hormuz's unique mix of geometry and volume is irreplaceable. We concentrated risk in 33 kilometers, and now the bill is due. Nations turn to strategic reserves. On March 11th, the IEA announced a 400 million barrel release, the largest in its history, aimed at calming markets and capping prices. But the world burns about 105.17 million barrels daily. That's less than 4 days of total demand. Against Hormuz's 20 million per day, it fills about 20 days of that flow. A brief window, not a long-term fix. Reserves manage psychology and bridge physical gaps. This time, effects were modest and temporary. They buy time, if disruption is brief. But the gap is vast. The timeline unknown. Reserves can't replace a shipping corridor. A finite stockpile, once drawn, it's gone. They smooth crises, not sustain economies through blockades. A powerful statement and a sign of desperation. After the drawdown, a world still missing 1/5 of supply. Oil grabs headlines, but cascading crises ripple outward. The Gulf supplies petrochemicals and fertilizers, about 30% of seaborne LPG exports and 24% of seaborne naphtha. Feedstocks for plastics, synthetic rubber, countless goods. Roughly 30% of traded ammonia-based fertilizer originates here. With shipments stalled, shortages bite fast. In 1 week, urea at New Orleans jumped 32%. 33 million TEUs move through Gulf ports, about 3.5% of global trade, feeding terminals across the Gulf. Over 130 container ships are stuck inside, finished goods and critical components delayed. Next, factory stoppages and retail stockouts. A geographic choke becomes a global shock. Shortages and price spikes spread. The longer it lasts, the higher the hidden bill. This is not just energy, it's a systemic crisis. No region is more exposed than Asia. The continent's powerhouses rely on Middle Eastern energy. In 2024, 84% of Hormuz crude went to Asia. Asia, 84%. These four accounted for 69% of flows. For them, the blockade is an existential risk. About 1/3 of China's oil arrives via Hormuz. Beijing's strategic reserves near 1 billion barrels, only months of cover. A cushion, not a solution to a prolonged blockade. India, Japan, and South Korea face similar exposure. IEA members hold roughly 1.2 billion barrels. In theory, covering a 14.5 to 16.5 million loss for 73 to 83 days. But perfect coordination is hard in crisis. Governments may hesitate to draw dangerously low. The Strait's security once served the West. Today its main beneficiaries are in Asia. Leaders must reassess strategy and security. Prosperity hinges on a volatile Narrows thousands of miles away. An urgent and painful reckoning begins. Consider the 130-plus container ships trapped inside the Gulf, global giants among them. Routine calls at Jebel Ali and Dammam. Tens of thousands of containers aboard, bound for Asia, Europe, and North America. One behemoth exemplifies the stakes. Departed Dubai, bound for Singapore and Northern Europe. Its manifest spans car parts, luxury goods, and petrochemicals. Now anchored, one of many stranded megaships. Crews are safe, yet in indefinite limbo. Cargo worth hundreds of millions sits idle. Downstream, halted auto lines, missed retail seasons, fuel burned, charters accrue, insurance rises, manufacturers delay, retailers face stockouts, contracts break, trust erodes, bulk and chemical fleets share the fate, aggregate cargo value tens of billions, operations scramble as fleets partially paralyze. 3 broad scenarios lie ahead. First, A quick reopening within weeks. Diplomatic pressure, limited successful escort operations. Prices drop toward 90, recession likely averted. Protected lanes and continued reserve releases. Second, partial selective transit persists for months. Iranian and neutral ships move, Western fleets blocked. Prices hover 110 to 130. Growth slows, inflation lingers. Policies: reroute supply chains, invest in non-fossils, ration energy. Third, a 6-month-plus full closure. Oil likely above 150. Deep recession. Widespread shutdowns and social unrest. Strategic reserves quickly depleted. Wartime-level controls, severe fuel rationing, asset nationalizations. Forced reconfiguration of energy systems, years and trillions. We stand at a critical juncture. Decisions now define our path. 33 kilometers hold global stability in their grip. The world waits, hoping the artery unclogs before damage is irreparable.